The US dollar index may be used as a valuable indicator in forex trading, indicating which direction the US dollar is headed. Hi, welcome to the channel. If you are new, please consider subscribing, so that you don't miss future videos. Remember to hit the like button just to motivate us to continue making these videos. By the way, if you are interested in making money online via trading etc., visit the links in the description box below. Let's get into today's video. The USD is a popular trading currency in foreign exchange markets. You could use US dollar index for trading purposes, and attempt to determine which direction the market is heading. You may do so by examining the charts for any upticks or downticks in value. The value of these currencies fluctuates constantly as they vie for dominance. If we're looking out into cyberspace, waiting for a change, surely you'd prefer something close enough to detect any changes? Fortunately, Forex, like many others, including the European Union, has its own version of software called the dollar index for assessing larger global movements. Will it give me a better idea of how to trade USD pairs? The United States Dollar Index, abbreviated USDX or DXY, is a measure of the dollar's strength in relation to other currencies. This index, like any other currency pair, may be charted and provides insight into future pricing fluctuations for this volatile commodity in trade today. Don't let the DXY keep you out of winning trades. By relying only on the DXY as gospel, you will not improve your performance. You must align your bias with the market's overall outlook for a certain pair. Euro to US dollar is an interesting currency pairing that allows you to profit from DXY movements. When one of the instruments in this forex pair experiences positive or negative movement, it is due to the state of Europe and its economy, as well as how Americans feel about the state. The notion is that if there is more anxiety about Eurozone debt financing difficulties, forex traders would desire fewer euros, while investors may want to purchase fewer US dollars at other times. This might be because recent economic indicators portray a positive picture for recovery efforts within American territory. Forex technical analysis. The dollar, like the majority of financial instruments, may be analyzed technically as well as fundamentally. Transferring technical data from the dollar index to a higher timeframe currency pair analysis might provide insight into potentially profitable pressured areas. For forex traders, the DXY is a critical indicator. The US dollar's value fluctuates in lockstep with its counterpart, spot USD, or simply USD, exchange rates to foreign currency pairings such as euro to Japanese yen, pound sterling to Swiss franc, and so on, depending on what you're trading, and how you're trading it. These fluctuations may assist in determining if an impending breakout will be upward or downward in relation to other currencies traded, like CAD/JPY recently. Consider a headline about China's robust exports, which help boost commodity prices internationally, especially steel, making many goods more affordable than they have been since 2011. As a result, JPY pairings may change in response to major USD news. If you learned something new in today's video, please remember to click the like button. Leave a comment with your thoughts in the comment section below. Again, hit the subscribe button so that you do not miss future videos. We will see you in the next video.